Good morning, students. Today we will discuss the 14 marks problem on the basis of normal provisions of Income Tax Act along with the MAT provision. Okay. First, I will explain the problem on the basis of normal tax provision, and also I will solve that problem on the basis of that method. Afterwards, I will go for what MAT provision. Okay. See, in normal provisions of Income Tax Act, first you have to calculate book profit, then taxable business income. Okay, then next go for what calculation of GTI NTI, then last one calculation of tax liability. Okay, first I will explain how to calculate book profit, then taxable business income. Okay, for that as per format we should be take first what net profit. How much is net profit here? 15,82,000. This 15,82,000 first you should be take as a what net profit as per profit and loss account. For this, it should be add inadmissible expenses already debited, allowable expenses not yet credited, nothing but given in the adjustment. Okay, allowable incomes not yet credited, given in adjustment. Okay, that should be considered. First, go for one by one. That is inadmissible expenses is already debited, then allowable incomes not yet credited, given in the adjustment. Okay, we will see one by one. First, inadmissible expenses already debited. Please observe, debit side we have so many of expenses here. In that find out inadmissible expenses or non-business expenses. So here first they given what trading account information here. In debit side, opening stock purchase, direct value, freight and gross profits. Please ignore that because related to the business. Then come to the next one, that is salary. Salary is allowable, okay, already debited, ignore that. Then general expenses, general expense, okay, the given is 3 lakhs. Here in the problem, if they give one general expenses, indirect then other expenses, miscellaneous expenses, sundry expenses, please observe the adjustment. If the adjustment is there, according to the adjustment it should be treated. If there is no adjustment, should be considered as a allowable expenses. Okay, in this problem we will see any adjustment is given against of general expenses. Okay, if there we should be treat according to that adjustment. Please observe, yes, we have some adjustment in general expenses. The first one, general expenses includes the following, which are the following information includes. The first one, festival celebration expenses 5,000, it is already included in the general expenses, so it is allowable expenses, just ignore. Second one, Diwali Puja expenses rupees 5,000, it is also included in the general expenses, so it is allowable expenses is already included, so that ignore. Then donation to PM National Relief Fund 10,000, so it is included in where general expenses. So donation to the any fund, okay, that should be considered as a inadmissible expenses, should be add back. How much add back? 10,000. So that if in the problem, if you are found the general expenses, then other expenses, miscellaneous expenses, sundry expenses, just observe the adjustment. If the adjustment is there, then analyze the adjustment. If it is inadmissible, add back. If it is allowable, just ignore. So we have 3 here. The first one, festival celebration expenses, then Diwali Puja expenses, then donation to PM National Relief Fund. These 3 is included in the general expenses. Out of 3, the donation to the PM National Relief Fund is inadmissible, so only 10,000 should be added back to the profit. Okay, this is regarding about what general expenses. If there is no adjustment, consider as a allowable expenses, then ignore. But in this problem we have adjustment. Okay, next one, sales expenses is allowable or debited, ignore. Then managing director remuneration is a allowable expenses in company. Okay, managing director remuneration is allowable in the company, so that is already debited, ignore. Next one, director sitting fees is very important. The director sitting fees is also allowable expenses, because the director sitting fees nothing but somewhat the business benefit. Okay, the director attend to some what any conference or any other valuable conferences. Okay, for that if they pay any kind of what fees, okay, that is called some kind of what allowable expenses. Okay, already debited, ignore that. Then income tax, this is income tax is the given in debit side is what inadmissible. Okay, income tax paid, provision or what penalty, if shown debit side is considered as what inadmissible, add back to the profit. Next one, excise penalty is very important one. Excise penalty, the word is very important. So it is what inadmissible. Excise penalty is inadmissible. Instead of that, just they given what excise is allowable. But here they paid what excise penalty. Okay. So this penalty is levied by the authority for the what? Some negligence of the company. So it is not allowable. Okay, so excise penalty or penalty of any tax is inadmissible, add back to the profit. Okay, the next proposed dividend, say a proposed dividend or dividend paid, interim dividend or okay, like that is considered as what inadmissible, because the proposed dividend is not expenses, is a apportionment of profit, so that it is inadmissible, add back to the profit. The next, provision for loss of subsidiary company, that is what 3 lakh, it is fully inadmissible, add back to the profit. Next, depreciation is given 1 lakh. So in case of depreciation, be careful. If the depreciation given in the profit and loss account along with the adjustment in the situation as per profit and loss account, add back, then as per adjustment, deduct. Okay, then here they given as per what profit and loss account. Please observe any adjustment is given about the depreciation. See any depreciation. No. Okay, in this situation you can go for two types of treatment. Either you can ignore or first add 1 lakh as a depreciation inadmissible, then again deduct the same amount as a allowable expenses. Okay, you can treat both. Okay, either you can take what first inadmissible, the same amount should be deduct as allowable. Okay, so this is the correct way. Do like this. First what, add this 1 lakh rupees as inadmissible, the same amount take as a what allowable as 1 lakh rupees, because in adjustment there is no specification of what expenses about the depreciation as per IT Act. Okay, in this situation we should be take the same amount as a allowable. Okay, so that was the treatment. First add back to the profit, then same amount should be deducted from the profit as a allowable expenses. The next, excise duty 80,000. Say excise duty is allowable, so already is debited, just ignore. Okay, this is what relating to the inadmissible expense already debited, so that expense should be added back. Once again I will summarize that. The general expenses 3 lakh, in that being they given three adjustments: the festival celebration expenses, then Diwali Puja expenses allowable, then donation to the PM National Relief Fund is allowable, so that add back. Okay, the next one, sales expense allowable, MD remuneration is allowable, director sitting fees is allowable, ignore. Then income tax 3 lakh is disallowable or inadmissible, add back to the profit. Excise penalty of any tax is inadmissible, add back to the profit. Then proposed dividend or dividend paid, okay, or interim dividend paid, it is not expenses, it is apportionment of profit, so that it should be add back. Then provision for loss of subsidiary company, it is not allowable. Then here depreciation, they given as per profit and loss account, there is no information as per IT. Okay, so in this we have two treatment. Either go for what ignore, or first should be add back 1 lakh as inadmissible expenses, then same amount should be deduct. Okay, the procedure like this you should be follow like this. That is, first add back to the profit, then deduct the same amount. Then excise duty 80,000, it is allowable expenses, are debited, ignore. Then check it out, any any allowable incomes not yet credited. Nothing but please observe the adjustment. Any incomes is there is not yet credited to the profit and loss account. Okay, any incomes is there? Any incomes is there? Please check it out. No, there is no income. Okay, it's not yet credited. Nothing but it's not given in adjustment. Okay, then so next go for what? Deduct. Which one? Inadmissible income already credited, then allowable expenses not yet debited. Okay, inadmissible income already credited we can find in profit and loss on credit side, then allowable expenses not yet debited we can find in adjustment. Okay, first go for what? Inadmissible incomes already credited. So here first we have credits as sales and closing stock related to trading account. Okay, leave it that one. The next go for what? Directly dividend from Indian company, that is 5,000. It is what? Income from other source, so it is inadmissible income, is already credited, so that it should be deduct. Then bad debts recovered. Here bad debts recovered 2,000 is there. Please observe any information about the bad debts. Okay, in adjustment, please observe in adjustment any. Yes, we have an adjustment here, that is fourth one. The bad debts recovered during the year related to the previous year 2018-19 were claimed as a deduction in the same period. So this word is very important. Whichever the bad debts we recovered, no, that is how much? 2,000. Okay, this amount earlier we taken as a what? Deduction. Nothing but is allowed earlier. If if it is allowed earlier, nothing but what? It is a business expenses that the company is recovered. So it is considered as a what? Business income. Okay, so it should be ignored. If it is not allowed earlier, that time it is inadmissible. But here they allowed as a what? As a expenses. Okay, earlier, that we are recovering, so that is a what? Business income. Okay, then any other incomes here? No. So we have only two. Okay, in profit and loss account credit side, that is a dividend from Indian company, it is what? Inadmissible, add back. Another income is bad debts recovered, it is allowable income, just ignore. Okay, then next please observe inadmissible what? Incomes is over. Then next observe allowable expenses not yet debited. Okay, then please observe general expenses. We have first adjustment general expenses, already we discussed that. Then next go for what? The second one. Sales expenses includes 1,000 dairies distributed to the dealers involving claim as a deduction in the same period. Okay, nothing but how much sales expenses included here? The sales expenses is 2 lakh. In that it is included 1,000 dairy distributed to the dealers. Okay, see here how much amount is there in profit and loss account? 2 lakh. In that the sum expense include of 1,000 dairy distributed to the dealers. So it is some kind of what? Promotion activity expenses. Okay, promotion activity expenses is already included. So just we need to be ignore the second adjustment here. Okay, there is no treatment. Just they give the information. Nothing but in total sales expenses. If total sales expenses, how much they debited to profit and loss account, in that they include some expenses. Here the amount is not mentioned. Okay, how much amount is included in the profit and loss account? In that, okay, the expenses related to the 1,000 dairies that are distributed to the dealers. See here, when the dairies are distributing to the dealers, nothing but is a part of promotion, so it is allowable only. Then just ignore the second transaction. There is no treatment of second transaction here. Nothing but second adjustment. Okay, there is no treatment. Next one, the excess duty relating to the previous year 17-18 rupees 10,000 was paid during the year. It's very important one. See, the previous year of 2017-18, okay, the outstanding duty paid in the current year. Okay, if any expenses paid in the current year is allowable only. Okay, but this expense is not yet debited. Okay, this excess duty not yet debited, so that it is allowable expenses. See here, any expenses outstanding in the previous year that paid during the year, that is what allowable expenses. Allowable expenses. If the last year's outstanding is there, that outstanding is continued to the current year also, that time is inadmissible. But here the excess duty is related to the previous year of 17-18, that was paid during the current year. So it is 10,000 is a what allowable expenses, so that it should be deduct. Okay, then fourth point already I discussed with you. So related to the what bad debts I explained. The next one, this fifth one. Okay, before going fifth one, okay, just we will finish off regarding about the calculation of book profit. So that here we have only one allowable expenses is not yet debited, that is what excise duty related to the 17-18 that was paid during the year, so that we should be deducted. So one more we have, that is what depreciation, feasible depreciation. Already I told regarding about that. Here depreciation we have as per profit and loss account, so add back as inadmissible. Then once again there is no depreciation as per IT in the adjustment. In this situation, how much depreciation is there as per profit and loss account, that should be considered as per IT. So that already we added, correct? No, the same should be deduct as per IT depreciation. Okay, then after doing this treatment, you will get book profit. From the book profit, you should be deduct two things, that is balance forward business loss and unobserved depreciation as per IT. As per IT, here we have as per book and as per what tax purpose. So in case of normal provision, don't take as per books. Okay, it is related to the MAT. We are doing normal provision, so that we require what as per IT related to the what tax we should be take, so that we should be take as per IT for both the amounts. Okay, from the book profit in normal provision, first deduct business loss as per IT 3 lakh, then unobserved depreciation as per IT 2 lakh. The both amounts should be deducted. You will get the taxable business income. Okay, we will get the taxable amount of under business head. Okay, this is about calculation of taxable business income under normal provision. Then go for what next? GTI and NTI, nothing but calculation of total income of all four heads of income. Then here first there is no HP income here, there is no house property income. Then second one, this one business income that we calculated, that will be take. The next one, short-term capital gain without STT, there is no income here. The income from other source we have, that is 5,000, show as a what exempt. The next one, we'll get other GTI. From other GTI, deduct what deductions. Say we have only one deduction, please observe it is included in the general expenses. Which one? This is the one, donation to the PM National Relief Fund 10,000. It is 100% eligible. The full amount we can take as a what deduction. Okay, deduct under 80G. Then any other deduction? So there is no other deduction. Okay, so we have only one deduction, that is 80G. Take 10,000 complete amount, because PM National Relief Fund eligible for 100%. Then next we will get what other taxable business income. Okay, then next further add income from short-term capital gain with STT, then income from long-term capital gain with STT, then next one other long-term capital gain, then casual income. So there is no like that income here. Okay, then after that we will get total taxable income, and that calculate the taxability with the respective rate. Okay, then I will go for a solution now here. Okay, then we will go for solution. Okay, we need to follow 3 steps for calculation of tax liability under normal provisions of Income Tax Act. Okay, first I will go for step number 1. There is calculation of taxable income of the business under normal provisions of Income Tax Act 1961. Okay, first we should take net profit as per offenders account 15,82,000. Then for that add inadmissible expenses already debited and allowable incomes not yet credited. Okay, then donation to PM National Relief Fund is there. It is included in the general expenses, so it is inadmissible. Add back 10,000. Income tax is 3 lakhs, inadmissible. Add back. Excise penalty 1,10,000. Add back. Proposed dividend 4 lakh. Add back. Provision for loss of subsidiary company 3 lakh. Add back. Depreciation 1 lakh. Okay, by adding these to the profit you will get 28 lakh 2,000. Then next go for what? Less inadmissible income credited and allowable expenses not yet debited. Okay, next go for what? Dividend from Indian companies already what created, so deduct 5,000. Then depreciation, say there is no what depreciation as per IT, so how much amount you added as inadmissible, so that amount, same amount should be deduct as a allowable depreciation. Okay, next one, another one is that excise duty paid during the year. Okay, excise duty paid during the year, okay, that should be taken as a what? Allowable expenses not yet debited. Okay, so then we will get what? Book profit, that is 26 lakhs 87,000. Then next from this you should deduct what? Unabsorbed business loss as per IT is 3 lakh. Then unabsorbed depreciation as per IT is 2 lakh. So here when you deducting here, it is unabsorbed business loss and unabsorbed depreciation, you should be take as per IT. If the as per IT is not given, don't take. But in this problem they given as per IT 3 lakh and 2 lakh. So deduct from book profit, you will get taxable business income 21 lakh 87,000. Then next go for, okay, next step is calculation of taxable income, the consideration of gross and net total income of the company. In that first you should take house property, that is income from house property, there is no income. Then income from business and profession, that is 21 lakh 87,000 we calculated here. Please observe 21 lakh 87,000. Okay, then next one, income from short-term capital gain other than STT, there is no income in this problem. The next one, income from other source other than casual income we have, that is what? Dividend from Indian company, but it is exempt up to 10 lakh. The next we will get what? Other gross total income, that is 21 lakh 87,000. For this claim deduction, in this problem we have only one deduction under section 80G, that is donation to Prime Minister National Relief Fund, so that it is eligible for 100%. This comes under without limit 100%. So that take how much they donated, that is 10 lakh. By deducting that, you will get other taxable income, that is 21 lakh 77,000. For this add what? Short-term capital gain liable for STT, there is no income. Long-term capital gain liable for STT, there is no income. Other long-term capital gain, there is no income. Then casual income, there is no income. Then total you get what? 21 lakh 77,000. Okay, then this is the what? Total taxable income of the company. Then go for what? Calculation, that is tax liability under normal provisions of Income Tax Act. Okay, then please observe this condition. If the company total turnover is not exceeds 250 crores, then tax rate is applicable as a normal at 25%. Okay, this company's turnover is less than what? 250 crores. See that while calculating the calculation of tax liability of the company under normal provision. Okay, please observe this note, which is a note here. If the total turnover of the company is not exceeds 250 crores, in the situation the normal tax that is applicable, that is 25%. Okay, if it is exceeds
then 30%. But in this problem, the company's turnover is less than or not exceeds 250 crores of total turnover. So that 25% is applicable as a what? Normal rate. Then next go for calculation of liability. First you should take other taxable income amount, that is 21,77,000, and that calculate 25%. Okay, there it is amount available. Please observe the second step. Here other taxable income 21,77,000. This amount should be taken. This amount. Okay. Then next one. Next one, short-term capital gain liable for STT 15%, there is no income. Long-term capital gain liable for STT with exemption of 1 lakh rupees 10%, there is no income. Other long-term capital gain 20%, there is no income. Then casual income 30%, there is no income. Then the tax liability without cess will get 5,44,250. For that, add cess at 4%, you will get 21,770. When you add these two, you will get 5,66,020. It is a what? Tax liability under normal provision. Okay. Next, we will calculate tax liability under MAT provision. Now we will explain which are the statutory additions and statutory deletions when you are calculating book profit under MAT provision. You will see the problem. See, this is the problem. Now I am explaining under MAT provision. See, in MAT provision we have three steps. One is calculation of book profit under MAT provision under section 115 JB. Second one, calculation of tax liability and determine the final tax liability of the company. Okay. First I will explain how to calculate book profit under MAT provision under section 115 JB. Okay. According to that format, please remember the format. According to that, first you should be take book. According to that, you should be take profit as per profit and loss account. How much? 15,82,000. Then next we will go for what? Statutory additions. See, which are the statutory additions we have here? Please observe. Salaries will not comes. General expenses also not comes in the MAT. Sales expenses also not comes in under the MAT. MD remuneration is also not considered. Data sitting fees don't consider. Then income tax, yes, income tax paid provision penalty, that should be called as a statutory additions, should be add back to the profit. How much? 3 lakh. This amount, the income tax amount 3 lakh, should be added back to the profit under MAT provision. Okay. The next one, excise penalty. Say excise penalty is not comes under MAT provision. Just ignore. Then proposed dividend. See here, this proposed dividend, it is addable one. Add back to the profit while calculating book profit under MAT provision. See a proposed dividend paid, the interim dividend is given, that is addable item to the profit in MAT provision. Then provision for loss of subsidiary company, it is also addable. Provision for loss of subsidiary company, it is also addable item to the book net profit under calculation of book profit under MAT provision. Next one, depreciation is very important one. Depreciation in MAT provision, be aware of that. Compulsory you should be add and deduct for the depreciation. If they showed depreciation in the profit and loss account debit side, that much of amount should be add back. While adding, it should be includes what? Revaluation, depreciation. Then we should be deduct compulsory the depreciation in the MAT provision, but while deducting we should be excluding depreciation on revaluation. Okay, later we will see. First what we are discussing about the addable item here. So depreciation should be add, okay, including of revaluation depreciation. So here if they given in the profit and loss account, so we should be considered as a including depreciation on revaluation until it's specified in the form of what excluded word in the adjustment. Okay, so it should be think as a what including revaluation depreciation. So take how much debited into the profit and loss account, how much debited 1 lakh. The next excise duty 80,000. So excise duty 80,000, it is what it is not comes under in MAT provision. Okay, it not comes under MAT provision. Then this is a what some addable items in MAT provision. Apart from that, don't consider. Just we should be observe whichever the items is applicable to the MAT provision that should be already debited. That is a very important concept. Apart from that, don't consider. But we have to consider only two in from the adjustment, that is depreciation on revaluation. Another one is brought forward business loss and unabsorbed depreciation as per books. Okay, we'll see later that one. Next, this is a what addable one. Then please observe statutory deletions. Deduct one. Which are the items should be deduct? Then further should be observe the credit side deductible one. Okay, we have here incomes. Dividend from Indian company, that is 5,000. It is deductible one because it's the exempted income. Okay, it is a exempted income under section 10 subsection 34. So it is exempted income. Okay, it's already credited, so that it should be deduct as a 5,000. Okay, section 10 subsection 34, it is comes under as a exempted income, so it should be deduct. The next one, bad debts recovered, it will not comes in the MAT provision, so just ignore. Okay, then along with that, two more is there, that is first one depreciation. So already told that compulsory should be add and deduct the depreciation. While adding is including the depreciation and revaluation, deducting excluding the depreciation and revaluation. Okay, so that once you should be add, then another should be deduct in case of depreciation. Okay, then so that you should be deduct the depreciation. Then next one is, please observe the adjustment here. Okay, in adjustment you should be consider these two things. Which one? Brought forward business loss, unabsorbed depreciation as per book. It's very important thing that for MAT provision required what? As per book. The normal provision required as per tax. Now we are solving as per MAT, so that unabsorbed business loss and unabsorbed depreciation as per book, whichever is least, that should be deduct. Okay, this is the explanation for the MAT provision. Apart from that, don't take anything to the MAT provision. Okay, then go for MAT provision solution. Okay, then MAT provision section 115 JB. Then we have 3 steps here. Okay, need to be follow. Then in that the first one, calculation of book profit under MAT provision 115 JB. Okay, next. So this is the what calculation of book profit step. Then first, as per this format, first we should be take net profit, that is 15,82,000. Then from that we should be add statutory additions. Here when you remember the format, no, it's a very simple calculation. Okay, so I taken as per format here. As per format, I'm going to be discuss with you in the solution. Okay, the first one is what? Income tax paid or payable or provision debited to the profit and loss account. Yes, we have the profit and loss account, we have income tax, so take 3 lakh. Okay, in second item in the format, that is transfer to the reserves, debit to the profit and loss account. There is no reserves in debit side, so nil. Then provision for meeting the liability in the form of what? Uncertain. Okay, there is no such kind of provisions in the debit side, so nil. Then provision for loss of subsidiary company debited to the profit and loss account. Yes, we have provision for loss of subsidiary company. We have. Okay, so I take an amount here, that is 3 lakhs, add back to the profit. Then dividends paid, proposed or interim dividend. Okay, in this problem we have debit side as a what? Proposed dividend. How much is there? 4 lakh. That should be taken into account and nothing but add back. Next, expenses related to the exempted income. So here we have one exempted income we have. Okay, section 10 subsection 34. Income we have related that we don't have any kind of expenditure in debit side. Okay, if we have the expenditure in debit side, then we should be add. But we have the income, but related to that we don't have any kind of information about the expenditure for earning that kind of income, so that shows a nil. Next one, depreciation debited is very important one. Depreciation debited in the profit and loss account, including revaluation of depreciation. So here depreciation as per profit and loss account is given, there is how much? 1 lakh. So here if there is no specific information whether revaluation depreciation included in the depreciation or not, in the situation we should be assume that depreciation includes revaluation depreciation, so that I taken directly here 1 lakh. Next, deferred tax provision. See here, deferred tax provision, if the given debit side we should be add back, but there is no such kind of information. Then provision for diminishing the value of any asset debit to the profit and loss account. Related to this, there is no information. Just ignore the balance in revaluation reserves. Balance in revaluation reserves is very important one. Balance in revaluation reserves relating to the revalued the asset, retirement or disposal of such asset. So there is no that kind of information in the profit and loss account debit side. So ignore. Then next one, loss of transfer of shares in special purpose vehicle to business trust debited to the profit and loss account. So there is no information of this in heading under profit and loss account. So nil. Total you get 26 lakhs 82,000. Okay. The next one, less statutory deduction. Say statutory deduction in that the first one, amount withdraw from the reserves or provision credited to the profit and loss account. So here there is no such information in the profit and loss account related to amount withdrawn from the reserve, so that shows a nil. Then exempted income credited to the profit and loss account under section 10, 11, 12, except what? Section 10, subsection 38. So here in this problem we have exempted income. Under section 10 subsection 34, that is dividend from Indian company. Okay, so it comes under section 10 subsection 34, dividend from Indian company, so that should be deduct from the profit. Next one, amount withdraw from the revaluation reserve credited to the profit loss account. We don't have that much of information here. Withdraw from the revaluation reserve, so nil. Profit of sick industrial unit in credit side, there is no such information. Then deferred tax is credited, okay, in profit loss account, there is no such information. The next one, very important thing, depreciation. So by deducting the depreciation, excluding depreciation on revaluation of assets, so that I am stressing out, depreciation should be add, then compulsory should be deduct. While adding, it should be including revaluation, depreciation revaluation, deducting, excluding. So already we assume that whichever the amount is given in the problem, that is including depreciation revaluation. Correct? No? Then if you are deducting that amount of depreciation, in the situation you should be deduct what? Depreciation on revaluation. So take depreciation as per profit loss account 1 lakh minus depreciation on revaluation. So there is no information in this problem about depreciation and revaluation, so that I showed nil. So net amount is 1 lakh. That is. Next, amount of brought forward losses, unabsorbed depreciation as per book, whichever is less, very important one. as per book we should be taking which one among the brought forward business loss and what then unabsorbed depreciation whichever is less as per book so here we have that information in the adjustment that is unabsorbed business loss is 1 lakh 50 then unabsorbed depreciation 1 lakh as per book we have so among this whichever is the least that is 1 lakh that should be deducted. Okay, then next there is no gain for transfer of special purpose vehicle okay in credit side so the show as a what nil then we deduct this amount you will get 24,77,000 then on the base of this calculate tax under MAT provision first calculate 18% on 24,77,000 you will get 4,58,245 then next add cess on that you will get 18,329.8 then total tax liability under MAT provision will get 4,76,574.8 this is the what tax liability under MAT provision. Then next we will go for calculation of final tax liability. This is the comparison of what tax liability as per normal provision, then tax liability as per MAT provision, whichever is high. Then see. Then tax liability as per normal provision is 5,66,020. Then as per MAT provision liability is 4,76,574.8. Among this whichever is high as per normal provision so that 5,66,020. Okay, then next go for what calculation of credit allowable to the tax credit allowable to the company. Here there is no tax credit is allowable to the company because the final tax liability the company paid as per normal provision so that there is no tax liability to the company. Clear? Say this is the what solution for this problem. I hope you understood this one. Okay, thank you.